Welcome to this market and economic update for the second quarter of 2024. In this video, we'll discuss three key insights that have driven markets to new all-time highs this year and will likely be important as the year progresses. These are the fact that the market has experienced a sustained rally since the end of 2022, the presidential election cycle is heating up, and the Fed is expected to cut rates later this year. Over the next few minutes, we'll discuss why all these events are impactful. First, the market has turned around since the start of the year, when many investors were concerned about a so-called soft or hard landing due to high interest rates. Since the first half of January, the S&P 500 has experienced a strong rally and achieved 20 new all-time highs. While this should be good news for long-term investors, some are understandably nervous as the market hovers around these levels. It's natural to ask whether the market hitting new all-time highs is a sign that it's due for a pullback. This chart shows that historically, the market experienced many new all-time highs during a bull market run. This is because the market has tended to rise over long periods of time. So, by definition, it does spend a large percentage of time at new all-time highs. Investors who worried too much about the exact level of the S&P 500 would have missed out on long-term performance, not just this year, but each year from 2013 to 2021. In most cases, it's better to simply stay invested and focus on the long run. Second, some investors are understandably nervous about the upcoming presidential election. However, this chart shows that the market has performed well across both parties, going back nearly a century. What this chart also makes clear is that the business cycle matters much more than who was in the White House. The peaks and valleys on this chart are due to the expansions and contractions in the economy, which, in most cases, had little to do with who was president or which party they belonged to. In fact, it's probably been said that all presidents would crash the market. This was certainly said about Presidents Obama, Trump, and Biden before they took office. And yet, the market has performed extremely well over the past 15 years. Of course, presidents do affect important policies around taxes, trade, regulation, and more. If you have specific concerns about a particular legislative proposal, it's important to have a discussion with a trusted advisor. However, this chart shows that from an investment perspective, it's important to not overreact to the outcome of an election or poll results when it comes to our portfolios. Finally, the Fed is expected to begin cutting rates later this year. This will depend on inflation and the job market, among many other factors. This chart shows the current level of the federal funds rate with the Fed's rate projections. Their latest summary of economic projections suggests that there could be 3 rate cuts this year, which the market currently agrees with. While much could change between now and the first rate cut, falling inflation and the steady economic backdrop are generally good for both stocks and bonds. In many ways, these conditions represent a reversal of the challenging conditions of 2022. So, despite the many challenges in the market, including the market being at all-time highs and the upcoming presidential election, it's important for investors to stay focused by sticking to their financial plans. We hope you found these insights helpful. If you would like to discuss any of these topics in more detail, please don't hesitate to reach out. We look forward to speaking with you.